As you're building business credit, you may think that the most important part of the process is the end, step 5, 6, and 7, where you start getting high limit revolving credit card accounts at stores and with fleet sources and Visa cards, MasterCards, even auto vehicle financing. But in reality, the most important aspects of the finance suite really happen right here in steps 1 through 3. Because this is where, when we look at commercial credit reports, you'll go from having a failing credit score or no credit score, because in this example, the person has absolutely no history at all and is still being issued a failing score. So again, you can be issued a failing score even if you have absolutely no credit reporting on your report like you see here. The problem with that is that lenders and credit issuers automatically will decline you in many cases because of your score alone. And the problem there is that they don't notify you that this is happening. You see, in the consumer credit world, you're probably used to getting a notification if you've ever been denied for credit. And that's because the Fair Credit Reporting Act requires that happens. Well, in the commercial world, there is no Fair Credit Reporting Act. So when you go to apply for business credit cards, loans, credit lines, and you oftentimes get denied, you're getting denied because whoever it is you're applying with is pulling your commercial reports and seeing what you see here. A very low score. They're seeing a very high risk borrower. They're seeing no established credit whatsoever. And this is how you get denied. So step 1 through 3 of the finance suite are very important because we're setting up your business credibly. We're helping make sure that you check the reporting agencies to see that you don't have a low score already because they know you exist and because they're giving you a low score because you have no credit established, and you start building initial positive credit. Now this makes a big deal because when we come here and look at another credit profile where the score is excellent, 85, the lowest risk you can get, we see that this person got here with only one account reporting. They only had one account to go from where they were, which is a 28, just like this other report that we saw, all the way up to an 85, and it only took probably less than 2 months to get there. And we can also see that the amount of credit they're recommended for is higher. So this is why steps 1 through 3 are so important, because as the more trade lines you add, you're able to increase your score. You're also able to increase this total amount of credit being recommended. So think of it like this. When you go to get a loan, when you go to get a credit line, when you go to get a credit card, what would you rather be approved for? A $1,000 limit, or would you rather be approved for a $21,000 limit account? Well, a lot of that really comes down to what's on your commercial credit reports. Your score of an 85 in this example versus a 28 is what will help get you better rates and terms on the financing you're getting approved for. The amount of credit you're recommended, which all commercial credit reports have, as you can see right here, this person's 1,000, will also determine how much you get approved for. In this example, it's only 1,000 being recommended. Here it's 2,100. Here it's 4,900. Here's one where it's 8,000 and another where it's 13,000, or this example where it's 21,000. So credit issuers, lenders, all look at this information to determine how much you're going to get approved for, as well as looking at your scores to determine that you will get approved. So step 1 through 3 really is where the rubber meets the road. This is where you're building the business credible, which makes you lendable, which helps you get initial business credit. This is where you're getting your DUNS number and establishing or seeing if you're established already with the reporting agencies. And in step 3, this is where you start getting the accounts that will give you the positive score. And as you start to obtain these accounts, 2 things happen. 1, you immediately move from low or no scores to positive scores as long as you paid those accounts as agreed. And you also start to move up the recommended amount of credit from low amounts like 1, 2, 3, 4, 5,000 all the way up to 13, 15, 20,000 or more as you start to utilize these accounts. So make sure that you work through step 1 through 3 of the finance suite. It's what is the most important aspect of this process because of what I just showed you. It's what will take you up the amount of credit recommended. It's what will take you from a failing score to a successful score. And this is the basis that's important that you build off of, because this is where it comes down to you getting approved for high limit revolving business credit accounts. And also, it's also what sets the foundation for you to get loans and credit lines as you continue to develop your business credit.